2,000 investors lost everything when a phantom gold mine in Indonesia turned out to be a hoax. This is the story of Bre-X, the billion-dollar scandal that never existed, and how it fooled analysts, banks, and regulators. In 1995, geologist David Walsh claimed to have discovered a massive gold deposit in the remote town of Busang, Indonesia. He partnered with a small Canadian firm, Bre-X Minerals Limited, and announced that the site contained 71 million ounces of gold, enough to make the company worth over $6 billion. The claim was backed by a handful of core samples that Walsh said showed extraordinarily high grades, some exceeding 70 grams of gold per ton. The excitement was immediate. Major mining houses and hedge funds rushed to buy Bre-X stock, driving the price from a few dollars to over $280 per share by early 1997. Major banks underwrote a $500 million initial public offering, and the company was listed on the Toronto Stock Exchange. Media outlets called it the gold rush of the 1990s, and investors poured money into the frenzy, believing they were buying a piece of the world's richest ore body. But here is what almost nobody sees coming, right? What they didn't know was that Walsh and his team had been salting the samples. They inserted gold dust and tiny nuggets into the core tubes before sending them to labs in Canada, Australia, and the United States. The falsified assay results were then used to produce forged technical reports that passed superficial scrutiny. Because the site was in a remote jungle, independent verification was difficult, and most due diligence relied on the supplied data. The fraud began to unravel in March 1997 when a senior Bre-X geologist, Michael de Groot, left the company and warned that the samples had been tampered with. Subsequent investigations by the Ontario Securities Commission and independent experts in Singapore revealed that the assay results were inconsistent and that the core samples had been contaminated. A forensic examination confirmed the presence of gold dust that could not have originated from the mine. When the truth emerged, Bre-X stock collapsed from $280 to under $1 in weeks, wiping out the life savings of thousands of investors worldwide. So why does this keep happening? The company declared bankruptcy, and Walsh disappeared, later found dead in a Bangkok hotel room under mysterious circumstances. Several executives face criminal charges. In 2007, the Ontario Securities Commission fined former Bre-X chairman David Walsh's brother-in-law, John Felder, for insider trading linked to the scandal. The Bre-X case remains a cautionary tale, even in a market obsessed with big numbers. Thorough, independent verification is essential. Relying on a single source, especially one that cannot be independently inspected, creates a perfect environment for fraud. Investors today should demand transparent data, on-site inspections, and third-party audits before committing capital to any mining venture. Remember, the Bre-X disaster wasn't caused by a lack of information, it was caused by deceptive information presented as fact. The lesson isn't about saving more or spending less, it's about demanding proof, questioning extraordinary claims, and never letting hype replace hard evidence.